Hey everyone, welcome today. We will be discussing the jobs report that just came out for the month of February. It was just released, but my name's Rock Daniels. This message is going out to all my realtor friends, my mortgage banker friends, my investor friends. I want to help keep you informed, giving you the information of what's happening in our economy and in our industry as a whole. Now, as always, don't solely use my advice or my information. Always contact a professional before making any financial decisions. All right, now we're going to talk about this February jobs report because it came in hotter, way hotter than expected, with the economy adding 311,000 jobs, which is way above the expectation of 225,000. Now, unfortunately, this is not good news in the fight against inflation, people, because we are not seeing the softening of the labor markets. All right, this report is essential because the data from it will be used by the Federal Reserve to make its decision on March 22nd of what they're going to do moving forward. Now, let me give you the gist of the jobs report. Now, the U.S. economy added that 311,000 jobs that I mentioned, but the unemployment rate actually went up from 3.4% to 3.6%. What? Now, I know it sounds like there might be cooking the books back there, but there is an explanation. Now, the unemployment rate went up because more people are leaving their jobs by the way of layoffs instead of voluntarily quitting. All right, so they're getting laid off, not voluntarily quitting. Also, the labor participation rate is increasing, ticking up by 0.1% to 62.5%, and the wage growth increased by 0.2% month over month and 4.6% year over year. But most of the jobs were added in services, 245,000 jobs to be exact, which is not good news for services inflation in the upcoming CPI report that's coming out this Tuesday. I just read an article that says that mainstream media said that the February jobs report was great because it shows that the Federal Reserve is doing a good job at bringing down inflation. But I beg to differ with you people. Maybe they're not looking at the same reports that I am, or maybe they've got some agenda that they're spewing out this false narrative that this is great. But here's the bottom line. This jobs report was bad for inflation. The Federal Reserve wants to see a softening of the labor markets in order for services and examples, housing, to fall, but that did not happen in this report for February. Now, let's talk about the consequences of this report and prior data for the upcoming March 22nd Federal Reserve meeting when they're going to make some of these decisions. Now, the Federal Reserve is contemplating whether or not to raise interest rates, to raise them, not whether they're going to raise them or not, but by how much. Is it going to be by 0.25% or is it going to be by 0.5% at that meeting? I also want to remind you of something very important. Now, at that meeting, they're going to release their updated economic forecast, which will give their prediction on how high they think interest rates are going to have to be to fight this inflation. Basically, they're going to give their peak rates, what their peak interest rates are going to be. Now, the two data points that are critical in their decision-making process are the jobs reports that I just mentioned to you and the February CPI inflation report that's coming out this week. It's coming out Tuesday, tomorrow, March 14th. Now, we have one piece of the puzzle, which is the jobs report that I mentioned today, and that did not come in looking good. It didn't, people, no matter what they say. Now, the Federal Reserve, in my opinion, is getting cornered with all this bad news. Hotter than expected January jobs reports. And now, February jobs report came in hotter than expected. So, hotter than expected CPI and PCE inflation reports for the month of January. The last piece of the puzzle is going to be that February CPI report, which is, like I said, coming out tomorrow on Tuesday morning. All right. So just so everybody knows, the big question is whether the Federal Reserve is going to raise those interest rates by 0.25% or by 0.5%. Right when Powell was testifying before Congress this last week, the probability that it was going to be 0.5% increase was like 80%. It's very likely, but split, with odds being fluctuating like crazy. This morning I looked, 50 basis point fell to a 50-50 chance, and 25% is more likely at about a 50% chance as well. So listen, guys, it's not whether interest rates are going up, it's how far, how fast, and for how long. So stay tuned. I hope this information helps you as a guide through the financial situation of our economy and what it's giving us at the moment. My name again is Rock Daniels. Take a moment, click that subscribe button so we can stay connected. All right, thank you so much for stopping by today. I really do appreciate it, and I hope to see you again soon. Have a great day.